Okay, folks, just getting set up. Can you folks hear me on Zoom?
Yes.
Awesome. How about YouTube? Just testing again, YouTube. Yeah, okay, Eric, thanks. I just saw your response. Thank you. Looks like we're set. We'll let this room fill up a little bit on Zoom and on YouTube, and we'll kick this thing off. And remember, folks, this is a software training, WaveTech Tuesday. Maybe I'll need to kick off the German metal again. Just kidding. We'll save that for tomorrow. It's much more fun. And folks on Zoom, you should be able to see my screen now, correct? Folks on Zoom, you see the screen, correct? I am not hearing you guys. Let me see what's going on. Stuart, can you see my screen?
I can, yes.
All right, cool. I might pull on your expertise today, actually.
Oh my God, no.
I'm glad you're here.
So presumably I shouldn't be running the YouTube on top, right?
Probably not.
Okay.
Might confuse you.
Uh-huh.
Okay, folks, about 3 more minutes. We'll hang out. Still have some final folks joining here. Just hang with me just another minute.
Hey, Bob.
Yes.
Don't forget to deactivate your trade station closing bell.
Oh, yeah. Well, I don't know how to do it.
I think it's under one of the preferences.
Yeah, I'm sure. Yeah, that'll probably take me more focus than I have at the moment. But I appreciate the heads up. So be prepared for the bell, I guess. If I remember it too soon, that's going to be on time. In just a couple of weeks or less, we're going to switch our clocks. You folks will, anyway. So let's go ahead. Sounds like that's a. Let me just admit some folks in. Okay, it looks like we're getting a reasonable room here, usually about what we get every week. So welcome everyone. We're not going to go through a beginning training. This screen just looks good, so I put that up so everybody could see that. The goal today is actually to talk about how to transition. Jay and I have been talking a lot about questions that keep coming out. And one of them is, how do I get from my portfolio to into a WaveTech strategy and seamlessly or reasonably seamlessly, and still keep the integrity of everything you're trying to do in the transition? And that's something, and I mentioned a minute ago, if you guys are hanging out around, and I'm glad you're on, Stuart, because I'm going to ask you about how you've handled customer accounts in the appropriate time when we get into this conversation, because I know we've talked a lot about that over the years. I think Stuart's probably been around since what, 07 or 8? Is that correct? So long-time user. So anyway, what I want to start with today is I'll bring up the product here, it's really just a splash screen here. And we'll start talking about trying to transition. And Jay, you're on as well, right?
Yeah, I'm here.
Okay, good. So you guys better be ready, because I'm going to turn some conversation over to you in some certain points in time. And Jay, I don't know if there's a portfolio that you have that you can share with me that, that might be good to talk about transitioning. I'm not sure what I have on this account. I'm using the, what am I using? The Kendall report login.
Oh, okay.
Okay. So anyway, folks, as always, thank you. We appreciate all the effort that you folks are putting in using the software, doing all the things that you have to do to be able to authenticate and use this product in your daily investing. And I think we've done so many of these now, and one of these days we threaten everybody we're going to try to get into some of these old videos and dig out some of those pieces. It's actually a bigger project than we like to look at, but we are working with bringing in some people that are going to be tasked just to do those things, because we've got so much video content out there, especially on the WaveTech process, that's going to be important to be able to dig through some of that stuff and bring it out. So so bear with me just for a minute, because I always lose this one thing on Zoom, which is really handy. And of course, I'm not seeing it right now. It always does this to me. Just make sure everybody's muted their mics out as well. I have a control, but I can't seem to find it right now on where it is. But anyway, yeah, so I think one of the hardest things, one of the things that we've heard a lot of conversation around, and Jay spends some time, and Jay, maybe you could address this and what you're since you're on the front lines of this, is the kind of questions that you're getting, so I can try to address them as well as bring in some other elements.
Yeah, one of the main things is they're already holding positions on, whatever stock they have, or several stocks, and what do they do when they build a portfolio in WaveTech and they put those symbols in there, but then the system is the position's flat. It's not in an open position right now. What do they do? That is one of the questions that they have. Or, the other one is if it's already in a position and they're not ready to get into the position, what do they do? But part of that's, well, you got to trust the system, because if the position's in, then, but you always have to research. You have to research the position, like what you have stated time and time again, is don't just do what the system says as you're transitioning over, even if it's an open position. You always have to look at how long has it been open? Is it a fairly new position? Is it older? Is it the end of its, lifespan? Is it going to get out soon anyway? So, but the main thing is, what do they do when they have money in positions, but the system doesn't?
Right. Yeah. Yeah. And there's a couple. That's not actually an easy question. It's a hard question and even a harder answer, because it goes to what Jay was just talking about here. Is really when you're utilizing the system and you have an open position. So you just signed up for WaveTech and now you've got all these positions, and where all of a sudden you look at there's a bunch of folks coming into the room, so bear with me a second here, folks. But there's, you're trying to decide, do I hold this? Do I get out of it? Maybe WaveTech is saying it wouldn't even own this particular strategy, and those are somewhat easy, I think, if you're trying to get in sync with a new portfolio. So the concept would be that you built a portfolio. I have my favorite Warren Buffett strategy up there, as far as the airlines. I actually got another buy on the airlines. We'll see if anything comes in. But the point is that once you've gotten into sync, meaning that you have all your positions lined up, when you first start, you get all these, you start to what I suggest is maybe use a short-term chart. Ultimately, you want to get to an intermediate viewpoint of the strategy. And thanks, Laybourne, for the super chat. Yeah, so that's always nice when I get paid for training. I like it. But anyway, but the concept I'm trying to bring in here is, if you have a list of stocks, you like these stocks, but let's say when you look at the models, they don't have any open positions. So maybe what we could do here to satisfy this is, maybe some of you on the Zoom meeting or even on the YouTube channel, if you have a position that WaveTech is out, or maybe you can bring up a situation you're dealing with, and I can try to deal with that real time. So Stuart, I see you on screen there. So do you have any thoughts? You got to unmute. Yeah, you're muted. I can tell. There you go. There you go.
Find the unmute button.
There you go.
Actually, I dealt with a situation very similar to that recently, when a buddy of mine wanted me to review some positions that he'd been holding for a while, and basically I set him up an expert with the dates that he came to me with them, and just wanted to see what the positions, in other words, what the system owned versus what he was holding, and so on and so forth. And then I went back through the positions that the system didn't own as of yet, and just to look at the performance. If they were poor performers, I took them out completely.
Okay.
If they traded relatively, if they traded periodically through the system, then I left them there for a minute just to see if a buy or a sell would come out. of the system, or if a cell will come out of the system to let them go.
Right. Okay.
So
I mean, that's typically.
it's a tricky question. I mean, it's you know, when you have a basket of stocks and you're looking to play them in the system here and the system doesn't own it, it is a little trickier to deal with, for sure.
Yeah. So, yeah, it's actually very. That's why I'm saying it's not an easy question to answer, because you have to. As Jay was suggesting, you got to look at the position, just like what you're saying, Stuart. Is you got, there's some of the stuff. There's going to be open positions, and Jay was addressing maybe it's well into the cycle. So let's take a look at a position here. I'm just trying to think of something that. Do you have anything in mind that you just looked at, Stuart, that I could just...
Well, let's take something like APHA,
Okay.
aphoria.
Okay. Yeah, so it's long right now.
Mm-hmm.
Yeah, so we can look at, so it's got a 9% gain, but we want to look at is go to the trade profile here and just see what it currently looks like. So right now, actually this is a really good one because it's about 50% through its holding, little less. So it's got 103 days. So if you're new to WaveTech or you're just watching the channel for the first time, what WaveTech does is when it gets a buy signal, it tells you what it usually does, or what it does based on all the transaction that's in the system from that standpoint. And so what you get is what you see is on the right hand side, it shows you that there's 103 days of 259. Now this is a weekly signal, an intermediate signal, so it tells you that it's expected to hold this position till June 7th of 2021. And so it also tells you that what the maximum held trade was 385 days. Now these are market days, so 259 days is a touch over a year basically. And then it gives you what the expected returns are during that period. The expected returns, I'll try to highlight this line here, are 14%, and then a standard deviation is 23. And right now we're at 9. We're about halfway through the trade. We've generated, close to, what are we looking at here? Maybe
60%.
Yeah, 50, 60% of the actual returns, the holding period, everything's in line on this particular trade. So if you already own this, buy it. If you didn't own it, then you could buy this, but it'd be maybe a little more sketchy. You'd have more considerations, because if, let's say we're only looking at 14%, you're up 9, maybe you want to find something that's got a newer position on, something of that sort. What's your thoughts on that, Stuart? What'd you do with this?
Well, in this particular case, actually, we bought it in because he'd had it before. So we bought it back in because the system wanted to own it. But we, of course, would look at, whether or not, like you said, where we were in the trade duration as well as the expected return. If it busts the 30 rule, then we're probably not going to look at it for a minute.
Yeah. Okay. Yeah. That's basically it, folks. And so there's one other consideration. So, and Stuart actually manages money for other people. OPM, not opium, but OPM, other people's money. That's what they call it in Asia, right? Other people's money, which makes sense. Not AUM, assets under management, as we call it here in the States. But but when you're looking at things, if you already have, like I know Stuart has strategies that he suggests for clients, it's the same thing you're doing as an individual. You're going to build something, you're going to back test and say, I really like how this looks. Now I want to put my money into that strategy. So how do I do that? And that's part of it, is looking at what you built, where the durations are, things of that sort. You might even look to replace some of the symbols in there, and as far as the I guess based on the duration and things of that sort. And you folks should be aware, WaveTech should be aware, the screens are now on portfolioexpert.com. So you can now pull those down, and there's also an explanation of how to use that.
One other thought on this, Bob, would be that inside of WaveTech, if there's a position that's not held or a position that is held, even more so, but we're not sure as to what to do with it, I would suggest that people put it in a daily as well as a weekly optimized.
Yeah, good call.
And that way a daily signal will get them out of it if they need to get it out.
Yeah, and that's something, you know, you were really well trained. We only spent about 3,000 hours on a telephone over the last 10 years. So, but the point is that's exactly what I always try to do. Let's say you have a position on and you want it, and the intermediate doesn't have one, but you can use those short-term, the daily model to trigger you out. So I always say, make sure that you're using the system, you have a reason to get in or out. And you could even, if you wanted to own something, you could watch it. Maybe you own something and you just bought it when you start looking at this thing. You put a daily signal on it and it's long, and you know, stay with the daily signal and then watch for the intermediate. Watch for the intermediate as well. You know, that way you'll have a much better perspective of what you're doing, and that it's being driven by a thought process and it's not random, or more not a thought process, but an actual quant process that's helping you to make these decisions. Yeah, we're getting
a classic example of that, Bob, would be Micron Technologies, MU. Daily bought it on Monday, or daily I think bought it last week, and weekly came on this week.
Okay, let's take a look at that. So MU daily.
Yeah.
And you can see it's got a plus sign, so it's long. Now, one of the things, and I have one last video to do, so we are going to be rolling out the expert platform here. I would suspect, what's today? Yeah, this week, starting Tuesday, the next thing I know, it's Thursday. So it's a lot of activity around the business during the next couple of days. But what you're looking at here, you can see that it did get a buy on 10-12, bought it at 50.50. It's at 52, so it's up 4%. Do you know what model it was on by chance, since you or you got it there?
I'll tell you now, 1 second. It was 1-2 weekly and
Okay.
1-2 daily.
Okay, so we look at 1-2 weekly then, and sounds like this was a new buy. Yeah, so it's showing the dollar sign over here. So this is the sequence that happened on the 12th. It got a buy. So if you were just looking, I want to own Micron and I want to move it into an intermediate position, use the short-term model, which to enter, and then when you get the next level, you can actually go in and put it to put the weekly model on it, and then you get a little longer holding period. Now, I've been running something which one of the things that we'll be showing once we have the expert out on the street here is that the doing a multivariant approach, and this is something that we have taught for years to do what I'm telling you right now. Use the daily, and then the weekly. Well, one of the things, if you don't mind some extra trades, especially if you have a custodian / broker that doesn't charge you for trades, you can do this. Is you put them on expert, you can put them on both. You can put them on both daily and weekly in the same portfolio and let it trade on different increments. And what happens, it kind of scales in and out of these positions. You can even take it to the next level. So somebody's asking on YouTube what the TCQWRs are. These are just ways to migrate to different elements in here. So if we do a C, it pops up a chart. And we already have a chart on this page, but you can see that chart anywhere you are. The W is if we wanted to add it to a watch list. So if we were just reviewing this, we could click this button here. There's a couple things we can do here. Is we can go, I want an optimized weekly. I can I can put it on a daily one too if I want to watch it here. I can also put a note to myself that what maybe I'm tracking this for a reason. And I also can go here and I can choose a portfolio if you have multiple portfolios that I'm watching it for. So when you do get a trigger on a watch list, you'll know why. You can put some notes to yourself up to 255 characters, and then you can also track it, say, hey, this is what I'm looking for. This is why I put it up there, and I'm watching it for, I put it on my Bob screen portfolio, and I can just go test, and I can save it. So I'm going to add Micron to, so it was added to my watch list, and I actually want to, so you can choose the watch list you want it added to, all that kind of stuff. So that's what the W is, and then the Q is for just to bring up a box if you want to look at the data. So you can actually go in here, and the graph is pretty ancient and old, but if you want to just view the data, I can actually look at all the tablets or data here going back to 1984 for this symbol. So that's what that does. So the R takes us to where we already are, which is research. So that's from that standpoint, that's all those buttons do. So hopefully that was helpful. But yeah, so back to the conversation here is it's really a difficult, not difficult, that's the wrong word. It's a process you need to go through in reviewing a symbol. And so maybe you love the stocks that you own, and that's okay. One of the things that I was going to suggest today is that you even consider setting up a separate account, like almost like a DBA account or a separate name account within the household of accounts. So typically you can set up like, I'll just say a Bob Jr. account and a Bob account, and then you can run them separately, and you can move the money within those accounts in there. If your broker allows you to do that, I know we do it all the time in the advisory world. I suspect you can do the same thing within an account. Within an account. I don't know. Maybe you folks. Does anyone that's on the Zoom meeting or on the YouTube actually have multiple accounts with the same broker dealer, kind of under the same umbrella or anything like that?
Yeah, this is Ram. I do. I have a couple of accounts with Interactive Brokers.
Okay.
But they are for different things. One is a retirement account. One is like a margin account for trading.
Right. Okay. And that's basically what I'm referencing. So you could set up an account just for the WaveTech portfolio, so you don't have to worry about the trades that you're doing affecting, trying to figure out what the balances are and all that, because that's going to make life a lot easier. And I came up with a brilliant idea, and I'll let you know after this meeting. I have a meeting, and we're trying to figure out how we can just port this stuff in. And I forgot, I talked to somebody yesterday. I forgot to ask them if we have that old tool, and I actually talked to him at length yesterday. And I'll have to, sorry, I'm going to make a note to myself, note to self, remember again. But what I want to be able to do is to, show you folks how to do that. And I see, so somebody, I'm just kind of back and forth here because there's some actually good questions on the YouTube channel, how to find signals on this platform. Every day there is on the home page here, it does show you, but it gets pretty crazy sometimes trying to track these things. There's you'll see on the home page there's 1.2 long. For today there were 372 sell signals and 54 buy signals, but you can literally click on this link and it will bring it up. And if for some reason it doesn't demonstrate, if you click on, I think, the symbol twice, sometimes the HTML table doesn't light up just right. So I clicked on it, it takes a second, there it comes. So if it's blank, just click on the security name once or twice. Isn't that what we do, Jay, when that happens?
Usually twice. Yeah, the security name or the symbol name will do it.
Yeah.
But it takes twice, 2 hits.
Yeah. Yeah. So anyway, but you can go through here. You can sort them by trading system. You can sort them by symbols, whether they're cells, market. It's symbol MP stands for symbol market position. So you can go through all these things step by step. And so there's a lot of information. Sometimes it's overwhelming. I know one day we got like 7,000 buys or sell signals. I don't remember what it was, but the best way, and I went through this as well, and in fact, I'm going to go over to the Portfolio Expert website on my account. There's 2 things I want to point out, and this is still what I've told Stuart and his associates and all the advisors that have worked with us for years, and it's the same thing for everybody, is really to get to bring up some sort of research. Like here, I'm downloading the stock screen here. I'll just open this in Google Sheets here. And so what you'll have there is a list of stocks that fundamentally meet some criteria, okay? And I'll show you how to find out all that stuff. But this is the list of symbols that come out of here, different types of viewpoints on the world. So that's there, that's part of the subscription. There's also, when you come up here under support now, you can go to stock screens and you can actually see what these screens are. You can click on the different screens. It shows you the style box, shows you what they're in, what's there, and then you can look at screening ideas, how to do some things, and definitions. So it shows you some of these duration rankings, and there's a bunch of stuff on that support. But this is, my opinion, the best way to find symbols to build something with. And it doesn't have to be through this methodology, but it needs to be through some sort of selection process. Maybe you have, and hopefully you do, you have something that you use yourself, and finding stocks that you like and criteria. It could be through a screener or something like that. There's plenty of free stuff out there that does a decent job, but you want to have some way to blend the fundamentals. There it is. Whoever told me to remember the bell. That's pretty funny. There it is, right on time, exactly 2 o'clock. Soon that won't happen on this show, because that'll be the actual close of the market. It will make me feel home on the floor again. But anyway, but that's always the best way to do your best to try to find stocks that make sense to you, even fundamentally. You can use that service that I put up there on the website, or you can pick your own ideas. And Jay has actually become the master of I call him the master of the thematic ideas, where you take maybe a theme. Like he's done stuff, he's got all kinds of names, creative names that he calls his portfolios, but they all have a theme. One might be transportation stocks, or we've got one that we build a COVID scenario, stocks that are likely to do good in that. So you can take those types of ideas and concepts and really bring them into the strategy, build that symbol list, and then you can back test, see how they do, and go through the whole process, which I've talked about in a lot of detail on this thing.
Hey, Bob, can I interject something while we're on this subject?
Sure.
So, being new to the product and just starting a portfolio, I'm running into the same questions that everybody else has, as far as finding stocks to enter in that aren't already too far into their trades in different models.
Right.
So what I did is I took your screener and I sorted it, and I took all of the stocks in your screener that weren't currently in a trade.
Okay.
First, I got rid of the duplicates. Then I put, because there's duplicates depending on the type of screen, but I got rid of the duplicates, and then I took all of them together that were not currently in a trade, and then I sorted those further by large cap, mid mid or medium cap and small cap. So you could actually look at and see which ones were not currently trading and evaluate those. Then I took the ones that off the screen that were in a trade and I separated those by caps, and then I also separated it by the most recent entry date. So if you have a stock that you're interested in, it'd be near the top of the list, and also the little bar that you have that describes how far it is into the trade or into profit.
Yep.
The ones with the least amount of time are at the top, so it's real easy to find trades that you can evaluate that aren't so far into the trade that they won't meet the 30%.
Yeah, that's pretty good. It's funny because Stuart, who was talking, he likes the duplicates. That's his favorite pick, right, Stu?
That is actually, yeah.
So yeah, he always looks for the ones that are on multiple screens as saying, hey, it fits, multiple levels of fundamentals. So but I like your methodology, Steve, because what that does hone it down and gives you a nice clean slate to start with. And then what you need to do on that next step on that is to actually look at a lot of those ERs, because I think the ER is right on the sheet, correct? It is. So you can actually sort by ER. You can really hone it down. That spreadsheet actually does most of the work for you.
Yeah, so that's a great recommendation about looking for ones, leaving in the different screens so you can find the duplicates, which are going to be stronger, obviously, because they've been identified in multiple searches.
That would be Stuart's theory, correct, Stuart?
Yeah.
Yeah, and I
utilize that on my next separation.
Yeah, we could tell you about hours of conversation around that particular item, and I differ a little bit, but it's fine. I don't really. He's actually has actual experience of doing it, where I just have an opinion. So I'm not very my opinion is not totally validated, but I do think it's a good idea both ways. But here's the thing that is the most important part of this, in my opinion, is that you're actually looking at the stocks. You understand at least from a basic fundamental viewpoint what these things are doing. Because the screen that I have on the screen right now, that's just a random set. This is just raw output of the system, and it's going to be really hard to find this stuff. Some of us that are on a Zoom meeting, I don't think Michael's around, but he's spent a lot of time in trying to actually figure that out. And he's come up with some methodologies. I talked to him the other day, and he's continuing down that path, which I think is brilliant, because I don't know that he's not on to something very substantial. There's still a lot of questions about it, but there is some things looking at trying to rate all the raw data every day. It's a lot of work. There's a lot of information. So by doing what Steve has suggested, what Stuart's talked about, and what I'm telling you, is if you can funnel it down, I don't know what the total number of stocks on that list, but I think it's about 500, I think, on that screen. And so you've taken this, maybe individual stocks himself, you're probably looking around between 6,000-7,000 real stocks that you'd ever want to have anything to do with. So you've narrowed it down to like 10% of the total universe, and probably going to the methodology that Steve was talking about going, you've now narrowed that 500 down. What would you say, down to the top 50 or 70, Steve?
I actually have about 230 of them.
Wow. Okay.
Trades.
Okay.
But some of them that I go through, you find out that they are in a trade, maybe under another model or something. So.
Got it. Yeah. So yeah, that's the other thing to watch for. And people, we've dealt with there's a lot of mutual funds in our system, and that's from dealing with the advisory community for 20 years. But a lot of those mutual funds also have duplicates across the board. And it's like try to find a mutual fund that doesn't own Apple. So you own Apple 5 different ways, and at different positions. So we've always been I guess, not an advocate of mutual funds from a standpoint of using them to run money. You can do the timing and things with them. ETFs are a little better, but even then you get into a lot of the trading. Trying to automate and trade baskets is more difficult. Not that it can't work. It works fine, but it's just not, you're not going to make as much money. You're not going to have the dynamics that you can create out of individual stocks going through something like what Steve is suggesting there and going through that sheet. I think, we wanted to get that back on the street because we took it off the street for a little bit. And I think, I'm glad to hear that you've taken the time to go through all that, Steve. It's very impressive. Thank you.
Bob, would you show how to get to that spreadsheet screen again?
Sure, absolutely. Yeah, so you come in to my account, and it's just like you're going to go to Wave. This is where we put it at the moment. I'm not. We needed to put it behind a firewall, so not everybody in the world would get it. But you click on the WaveTech Research tool, right next to where you can launch a browser. It says Download Stock Screens. So you just click on that, and I've got it set so it's going to go to Google Sheets right now. But so you can download the actual XLS if you want.
Yeah, thanks. I'm just blind.
That's all right. You had it. I won't even tell you what happened to me once. Jay's not allowed. I've told him he could never say this in public.
And sworn to secrecy, and I still haven't told anyone.
I go, oh God, don't tell anyone I actually did that. So don't feel, that was Jim, right? That was talking.
That's correct.
Yeah. So don't feel bad about that. It's all good.
Okay. But thanks.
At least you didn't actually design the software and say what I did, right, Jay?
Yeah, that was interesting.
Yeah. Some days we might let you in on the joke. Anyway.
Okay.
But it was only that I hadn't used when we revived 2.0. I'm going to actually cover myself. When we did revive WaveTech, we didn't. I hadn't used that part for a while, but it was quite comical, I would have to say.
We had gotten so used to using expert. We're like, WaveTech, what's this? Look at this. So how do we do this?
Yeah, so it was.
How do we navigate?
Yeah, so it was interesting. We're back now, right, Jay?
100%. Sort of.
Yeah.
Our version of 100%.
Yeah. Did you have anything else that I haven't talked about that we haven't discussed? I really think I'm glad that folks are getting used to it, using that, and maybe we need to kind of remind users and send them some emails and stuff too. So I know.
The only thing I would suggest, Bob, with regard to stock screens, is everybody needs to keep in mind that they're run as of a specific day. So here we are, the 20th of the month. These were run on the 3rd of October. So something that they're looking at in that screen, they definitely still want to make sure they do their research on, depending on where it is in its trade profile.
Right, and they get updated once a month. So at the beginning of the month, there'll be a new snapshot, and this next. So okay, that's actually brings up a really good conversation as well. Is the best way, especially when you're doing screening, you can do the snapshots. So the EPS kind of stuff, those kind of things are they are going to be slightly out of date depending on what kind of movement those individual issues have had. And then the other side of things that you have to look at is that when all the other metrics come out. So right now we're in the midst of earnings season, right? So what'll happen is about the second week, even the third week of November, we will have all of the metrics that all these folks have reported, and all of the metrics will be updated. And so that you're going to have new metrics, every metric that I was just looking at, if I click back on the screens. So if I go over here to where the actual metrics, the fundamental data is, all this stuff will be updated as the companies that we're screening for have updated. And probably 85% of everybody kind of goes in on the quarterly. There's some folks that report weird rotation, but for the most part, most of these stocks are going to report right now, And as we come in, I think this week we had about 550. Next week will be a bigger week. And the next 2 weeks, actually, right as we come into the election and all the other crap that's going to hit the markets, we're going to be dumping all kinds of stuff is going to be hitting the street at the same time. And then right after the election, then we've got employment data, and it's going to be a cluster as we come into the next couple of weeks for sure. There's going to be a lot of elements there to do that. Hey, welcome, Carlos. Sorry, I didn't see you hanging in that waiting room. I'm not sure how long you were there, but welcome. So, yeah. So, Jay, I'm not sure. Was there anything else that I didn't cover?
We could go back to one thing, but while we're talking about this, and I hope it's pertinent or makes sense with the stock screens, is they're, in my opinion, done so well and fit within the system so well that, and I even mentioned this on the YouTube chat, I was trying to help one of the guys who was asking about some of the stuff on the stock screens, is that my small block motif portfolios were run off of last November's stock screen, and they're just screaming. I mean, they're just holding their own and doing really well, and those were off the older screens. So I know it's good to update and keep checking and see what's changed, but rest assured and have faith in our process that this stuff is solid, because those, I mean, some were up 35% or, you know, whatever the case, they're doing really well. And I used them off the older screen before we revamped and started doing them again. So to me, this is gold. I mean, these stock screens are awesome.
Yeah, I think Stuart would probably agree with that.
Yes. Yeah, and I wanted to add to that, is Stuart, when you guys are talking about the duplicates and triplicates on some of those symbols, that's a new motif that I'm currently testing and working on, is exactly that. I went through and that's all I did was grab the duplicates, triplicates. There was even a few that were quad. They're like in there 4 times, but I was doing that. That's a new idea that I'm testing right now. But real quick, could you go back to like the either the all stats or just like, oh, there you go. Yeah. What I wanted to, don't do anything.
All right.
You're perfect. You're perfect where you're at. This is one thing, and I know a lot of the people on the call or on the show know this, but it's good to go over it again for the new people that are watching, especially on YouTube. But when you're talking about the mutual funds and all that, a lot of the people ask, how do we sift through or weed out the mutual funds and just get to the stocks? So on this page, you can see the sector title heading or the column heading. When you click on sector twice, I believe it's twice, it'll actually, yes. So now if you may have to jump to a few pages.
Yeah.
That is the best way right now that we have to filter out all the mutual funds, and you'll start getting into the actual sectors of, there you go, like services,
there it is, page 7.
You see, technology, services, that right now, the utilities, transportation, just that's the way we have right now to kind of filter out the mutual funds the quickest way at the moment.
No, I'm glad you brought that up, because you bring it up. They got a lot of these things are mapped, and just, you know, all I can tell you is I'm about to spend a bunch of money and getting our entire environment mapped completely as perfect as it can be, from the stock sectors to all this stuff. I'm looking at 2 data services right now that are going to help me remap our database, because it's gotten a little bit out of sync on some of these new symbols. There's a lot of companies that have disappeared over the years. You have to realize that our database actually goes back to 1980. So we have historical data back to 1980, and a lot of symbols that might have some old data. We have to watch for this stuff all the time. It's kind of a minefield when a new company comes out, does an IPO, and then that symbol may have been, you know, a previous symbol. You know, like for instance, Citi, for example. C used to be Chrysler, and I remember when Citi got the C, you know, and those things happen all the time. So we had old Chrysler data, we had to purge the data and then refresh it. So But anyway, I am working on that. It's a top end project for me right now to get this done, and it's like one of the most important things I feel like I'm working on at the moment. From that, getting that database as squeaky clean as I can.
And Bob, the only other thing that I would add to this for everybody, either on the YouTube channel or on Zoom, is that, if you've got an idea or you've got a set of ideas, write them down and stick with them and work within that motif, if you will, to use Jay's word. You may not own all of them right away, but at some point or another, stuff is going to trigger on and off, and you will make money with the system. It just doesn't. I mean, classic example is your air buffet.
Yeah.
That will sit there and it will trigger on and off and what have you. But at the end of the day, pick a theme and try to stick with that theme, guys. If you're in the transportation industry and you know it, work your transportation stocks.
Yeah, and be willing to hang out and do nothing for a little bit.
Yeah, absolutely. It's
not
all on all the time.
Yeah, there's an illusion. I'm speaking actually basically a week from now. I'm speaking to National Association of Active Investment Managers on their symposium, and that's part of what I'm going to be talking about next week. Is actually portfolio construction, understanding, and something that if you don't have a process, I can't make it a sales pitch. I'd like to when I'm there, but I can't. But what I want to talk about is something that I've talked to you folks about, is what I call dynamic profit harvesting, which is what the process does, where it's rebalancing and taking those things, but it also protects the assets by just being in cash sometimes. Like the Buffett strategy is perfect right now. If I look at that at the moment, what we're looking at here is we go to Buffett right now. It's up 83% this year, but it has two open positions. When I look at that, both of these positions, one's down 3.5%, the other one's down 0.76, just came in on the 19th, one came in on the 12th. But when we go to the summary page, this strategy right now has 65% of its money in cash. It's not doing anything. But when it did kick in, man, it rock and rolled up here. And then it got out, and now it went flat. It tried to get back in. Airlines looked like they were starting to move. And, let's face it, all this stimulus talk, the airlines have got to be in play at some point, where, they can't let the entire transportation system collapse. Not only doesn't anyone want to travel right now, there's nowhere to travel to. So it's kind of funny. It's like, an airplane to nowhere. I saw I know we've got a couple folks on in Asia, but I saw somewhere out of Singapore, they were literally taking people up on an airplane and flying around for 4 hours and come back to the original destination just to be on an airplane. They had it was like a Disney ride or something. I read an article probably a month and a half ago about that. I thought that's just hilarious. So, but I guess people just want to be on an airplane, I don't know. I like going somewhere. I don't think I don't like flying around that much.
Yeah.
So anyway, anybody else have some ideas, things that they're struggling with? I think I want to continue down this trail.
Hey Bob, I had one sort of maybe slightly unrelated question. The screens that you put out, you said you update them once a month or on special events.
Yeah.
Is it possible for you to update the stock price at the end of the day, and you don't have to change the screen itself, but just because sometimes it's like you're going through it and say, wait, these numbers aren't right, and then it just throws you off for a bit.
Yeah. Yeah, there's actually
about 4 or 5 columns which are daily information.
Yeah, it's actually not, because where that comes from is that we have to run a complete rescreen. So all the EPS numbers, everything's going to change around. Everything will be dynamic. If you think you're confused now, wait, if I did that, it would boggle your mind. You wouldn't know where you were about.
No, I definitely don't want you to be updating this every day. I was just looking at those columns, where it's just the the end of day price would get updated. That's
Yeah, they're static sheets when they're run, so it's just an Excel sheet. So I would like actually to have this so it was updating in the system. This would be really nice. That's actually something in for an enhancement for sure. That's actually a really good idea, Ram. I just think that there's no way to do it in this environment. Anything. Well, so for years I've had this comment that I've made is, if we can't automate it, we don't do it. Right now we have too many things that aren't automated. There's a man standing in the middle that has to pull the trigger. And I guess with everybody on here, if you're using the if you're using the market grid, every once in a while we've been having this issue where the numbers get skewed out of sequence. It happened last night. I looked at it, it looked fine. A quick review, there's so many symbols in there. We are very close to having a completely new methodology that will just give you the ability to go in and actually even search for symbols, and it's only going to show you one symbol. You won't have to scroll through. I think they'll be there, but you can actually search, and it's also not going to have to convert to HTML like it is. It will be HTML, but it's a completely different process. It's been being worked on for about the last 3 weeks, so hopefully in the next week or so we'll have that out, which will make life a lot easier for that. I can't figure out why the HTML. It's like it's shifting up to the next stock up or something. Some column in the conversions happening and it's skewing it. So I'm trying to figure out what's going on there. So.
Thanks, Bob.
Yeah, somebody's asking where to find the daily numbers. I'll go back, if you're you got to be a WaveTech subscriber. Once you're in, you can literally go right here where it says Market Grid, and this will bring up all the Market Grid numbers there, so you can go through it. I think Jay said, what was there, 91 that got skewed last night? I'm not sure what happened.
I think my count was 91 or 93. There was over half that. Most of them were daily where the column shifted down, and then I found a few of the weeklies that had shifted.
Yeah, so there's some going on. We have
you just passed one like ED, the @ED was one, I think. Right there, like ED, where the daily is, then the weekly.
Yeah, interesting. And it might be a decimal issue actually, but I'm not sure. 99, yeah, I don't know. But anyway, we're looking at it. I've got a meeting right after training today to discuss what's going on. But yeah, I'm not sure what's going on there. But anyway, that's where you find it. Whoever asked that.
Hey, Bob.
Yeah.
If you download that stock chart that you had into Google Sheets, there you can get a Google Finance can automatically download into it for the price.
Really?
Current price. Yeah, I just posted it on the chat right there, the formula. A2 would be the cell. So change the cell to whatever it is, and it'll automatically bring it in. It's a 20-minute delay on it.
Right. But at least
you're getting something.
Yeah, that's actually really good to know.
That's the beauty of Google Sheets is there's numerous things that you can bring in from Google Finance into the chart.
Yeah, so when this comes up here, what you're saying is where this over here, where's that happening at?
Wherever you had a minute ago, current, I guess current price or whatever.
Column M.
Yeah.
Column M.
Column M. Yeah. Oh, okay. Yeah.
Current price.
Right there. Yeah.
Yeah, you could go in and put the formula there, equals Google Finance, and then, that would be M6.
Got it.
Where the 155 is, and then just copy it after you've done that to all of them, and it'll bring them in. It's slow, but it'll bring in your price for you.
That's actually cool. That's something that, yeah.
The only issue with that, Bob, is it won't adjust P&L or anything.
No, I know that,
No.
but yeah, and you don't want it to. Well, you
No,
guess
I was just getting the person before that was saying, can you give the current price?
yeah.
Or yesterday's close. You can bring in, I believe it's PREV close, and it'll bring in the previous close also.
Got it. No, that's excellent. That's really good.
Hey, Bob, just as a quick little tidbit here, if you want, you could potentially add a new column there and just paste the formula that Michael provided to give you a current price if you want, if you don't want to skew the data for any of the other cells. I don't know what the dependencies would be.
Yeah.
But that's another option for you as well.
Okay. Yeah, AJ, we still need to hook up, man.
I know you're a busy guy.
No, it's not. It's like crazy. At least I've changed my life where I'm not staying up till 2 a.m. anymore. I'm actually getting things done a lot earlier, and we're actually scheduling the nightly videos. You know, I've actually been home for 4 hours every night, so every night feels like Friday night. I told my wife last night, it feels like Friday night again. I'm home at 8 o'clock at night, not at 2 a.m. So anyway, yeah, but those are really good suggestions there, and yeah, especially like you said on bringing it up in Google Sheets is perfect. So AJ, what you're saying, that we could put some code in there automatically that would cause that to happen?
Yeah, so you would just add another column in there.
Yeah.
And just write current price if you want, or you could write, you could name it whatever you wanted to name it as a header, and the formula that Michael gave, you could pop it in that whole column all the way down.
Yep.
And just adjust it to make sure the tickers are right, and you'll have that closing price there, or a 20-minute delayed price.
So what would happen if you're in Excel and you're not in Google Sheets? You would just get the whatever price was in the sheet at the time?
Sorry, say that again, please.
Yeah. So if you just opened it in Excel, not in, so it wasn't live on screen like this is on Google, that it's just, you're just bringing it up, it'd just have whatever price that was in there before, correct?
Yeah, if you don't have the access to Google Sheets, in other words, paying for it, whatever, then you don't have access to the Google Finance bringing it in. It will only work in Google Sheets.
Got it. That's what I thought. Yeah.
I've seen it where you can have Google Finance put numbers into Excel, but maybe Michael's experienced something a little different. It would probably be the most streamlined if you had it in Google Sheets, though.
Yeah.
The communication in the back end happens faster.
Yeah, that's all you really need then. Yeah. That's excellent.
Hi Bob, it's Wayne.
Yeah, Wayne.
Another quick way, just if you need the prices, if you just grab them symbols off the spreadsheet and just dump them into a daily or weekly watch list, it'll tell you straight away and sort it.
Yeah.
It'll get the prices the day before.
Yeah, and that's something that's actually good. And also, if I were to do this, I could just take and dump these in and make a watch list accelerating U.S. growth right in WaveTech.
That's it, and it does that in 2 seconds.
Yeah, it's that fast. So yeah, those are great ideas. Absolutely great ideas. And you're another guy I need to hook up with.
Oh, yeah, we'll get there eventually. I know you're really busy, Bob.
Yeah, no, it's not. It's
how much you guys do.
It's timing. It's like it's just the schedule. Trying to get there. I know late afternoon, my time is good. That's early morning your time, correct?
Yeah. Well, it's morning now.
Yeah, exactly. Okay.
Having a cup of coffee.
Yep. I remember living upside down. I used to say it because we always traded the U.S. markets, and trying to live down there was interesting.
Yeah, that's the thing. You got to trade the US market doesn't open till 11:30 at night our time.
Yeah, well, listen, I was down there when there was no Southern Hemisphere satellite, so we didn't even have live quotes. So we had some mates of yours, that young kids that we had in Chicago typing prices on a telex, and then we had a kid in Melbourne and Sydney and a couple other offices actually on a chalkboard writing prices down that were 20 minutes delayed. So that was pretty, and people were trading off of sitting in our office at 2:30 in the morning. So it was interesting when I was down there. So, but that was 1980. That was a few days ago. So
your timing's perfect now for when you put out your video at night time. So that's like 4 o'clock at our time.
Yeah.
You can set everything up for the night's trading. It's really good.
Yeah, I've had a lot of good comments about that. So yeah, we're getting they've actually been done the hours earlier, but we just found that 11:30 our local time is a good time to release them, and it works good with the European folks as well, because it's right after Asia's closing and right before London's opening, so it works really well. So and I hate it because we're going to change that. Our whole time schedule is going to change as well, because everybody's going to move their clocks except for us. And so we're going to be on Mountain Time, which we should be, and not on Pacific Time. So that's going to, I'm not sure, I'm going to have to look at that at the schedule. So everything's going to be different. So I'll adjust accordingly, I guess.
That's all good. You just yell out whenever you're free. I know you got a lot, like I said, you got a lot on, so that's good.
Yeah. Yeah.
So thanks for all your great work. Good stuff.
Thanks. Appreciate it, man. So let's see here. We are about an hour in. Yeah, that's the other thing. It's going to make me finish earlier because I've got other things as we go forward in the winter months. Stuart, you got something, or Steve?
Yes, I have something I'd like. I wrote this to Jay. It's about the market grid.
Yeah.
I've observed that the daily, weekly, and monthly typically are expanding, where they're getting the numbers grow wider apart. But every once in a while, the weekly gets narrower than the daily, or the monthly gets narrower than the weekly. Or so what is the intelligence that is supposed to be showing me? Is that in showing me that the 40-day moving average is moving in a different direction than the weekly moving average?
No, that's really a good question. What happens is, what it tells you is when the weekly is narrow, and then all of a sudden you see the daily actually is bigger than the weekly. It has to do with volatility, because that means volatility probably increased over the last 3 days, but so it uses the same metrics on all the charts. The last 3 and 5 day, there's a combination of a look back, 3 and 5 days. Well, it also does 3 and 5 weeks and 3 and 5 months. And then it does calculations based on that volatility. So there's some smoothing in the calculation, trying to come up with a general weekly range. Well, when that comes out. So like, let me just bring up the market grid. So, but that's a good question for the grid. Is sometimes you'll even see that maybe RX daily is higher than the RX weekly.
Exactly.
Yeah, and what happens is that's when the market's moved up into that extreme range. Like we printed, I'm trying to remember what market it is right now, but we printed into the higher end of the range of the market grid on a weekly. I think it was last week, maybe S&P, but then you could see the daily numbers were showing prints higher than that, and that was only because it's adjusting. The daily has the ability to adjust closer to market conditions, but most of the time the weekly will stay within the market grid and the monthly. I guess I could here's an example. Here's the daily I put on the screen here for a minute, and we go to weekly. You can see for the most part it is interesting. You may, I talked about this RXT cell signal we got. Hang on, I'm going to put SPX up here real quick. We got this RXT cell signal a couple weeks ago. This is the second week of basically downward action that's coming here. But what will happen is when you get up to these extremes, if we were to bring in daily, I'm just going to mark a number 3384. I'm going to flip this. I'm trying to figure out what day that would be. That's the hard part. It's going to be too complex to put it together, but that's what's happening. And then when you go over and we look at a monthly time frame, then it's calculating based off the ranges. So what it's looking at is the average ranges, and then it's projecting out what the high lows are going to be, and then it's looking at the ticks in between S1, 2, 3, and R1, 2, 3 are calculating what the Fibonacci relationship is to the previous close, whether it's monthly, weekly, or daily. And these numbers, like I'm just looking at, this is monthly SPX, and let me bring this up here. But that's a good market grid question here.
I can try to summarize what I've already heard you say. It's not a function of the moving average. It's a function. The market grid is not a function of the moving average.
Correct.
The market grid is a function of the projected volatility that we may expect over a period of time.
Yeah. So like these and the look back, the volatility that has been experienced on average. All I've done is taken there's a calculation between 3 and 5 weeks. So it says this is what the range typically is based on that look back, and then it figures out like I said, the S1s and all the different ticks in between are the R values and the S values are doing this. The extreme is basically projecting out what that average range is up on the top end. So it's saying that normally, like you may have heard me on market videos talking about that the 3-day volatility or the volatility indicator is currently 105. Well, what that means is the typical range is 105. So it's projecting those out. Then it's telling you, then it's doing a Fibonacci ratio of each one. And I've said this before, I'll just finish the thought, is the whole market grid came from an institutional clients I used to have that are both buy-side, sell-side hedge people that I dealt with back in the 90s, in the late 90s, trying to figure out if they had to buy or sell, trying to figure out the best point which to execute hedges. And most of these were large bank institutions. So all we're trying to do is say, hey, here's the best value if you're a seller, here's the best value if you're a buyer, and try to target those ranges. That's what it was developed for. And then after doing that, that was 22 years ago, I realized, shit, this stuff is great for figuring out intraday swings. Like today was awesome, by the way, on SPX daily. I mean, it was amazing. We had a couple of things here. You see, the 3482 was RXT. We had a high of 76, but the moving average was 71. And I talked about in last night's video that it was upward sloping, that the 10 period moving average was going to be the resistance point if we rallied. And this thing moved up from 63 yesterday to 71, and it still looks like it's upticking here. Let me just bring up, we got I'm just seeing what we've got here. Yeah, so this is interesting as well. It looks like we've got a slight upslope. This is the new grid for tonight. Let's see here. Is this? Let me just double check numbers here. Yeah, so this is going to be the new grid for tonight. There's no the reopen doesn't happen for a while, but you can see that now 3489 is RXT, and what we saw when we look back, we did see that big day that we had not yesterday was an expansion of the average volatility, but we still stayed within the grid yesterday, right? And today we had an inside day, we did not print. I'm just looking here. This is a futures. So S1 was 3407. I was fantasizing about it hitting that just because I was short up at on my Twitter account. If you follow me on Twitter, I was a little more visible on Twitter today from a trading standpoint. But it just but the point is that that number up into that R3 number was amazing place to be looking to short, and it also in the futures 3462. So we traded just above the moving average. We had R3 there, and it ended up to be a great reversal off of that. But that's the whole reason for what's going on here today. Every day when those things get updated, is that average range is contracting and changing, and when you get into like over here, when you see this big expansion as we go into when that high on September 9th happened, then you get this big volatility expansion, and that's usually when that happens. The grid is, I'll talk about it in nightly videos. Maybe it's S1 or 2 based on what's going on. Maybe if it's downward pressure, we're looking for R1, S2, those kind of values, and watching for reversals intraday from a trading standpoint. And like I said, the whole methodology, the whole reason that I did this was because of some old bank customers that I had wanted for me to give them values where if they were on the buy side or sell side on the hedge side, primarily in interest rates is what we dealt with bonds and back in those days. And so, but it turns out that I started applying this, and one of my associates actually challenged me about 4 years ago now, like, you should be able to automate this. I go, no, I don't think so, because I used to do it on a couple markets and do it manually, and I did figure out how to automate it. And that's been just a great addition. Sorry, long answer. But
I appreciate your answer because you discussed the grid in more detail than I've ever heard.
yeah, there's a video that, so that's one of those tidbits we should scalp out of there. I get into those, I think, MS.
It could be worthy of that discussion, yeah.
Yeah, no, it's good stuff, and I try to get into that stuff, on the live stream tomorrow and all that. But that's exactly what's going on, and that's why it's valuable. It doesn't mean I get the trolls out on Twitter and on the channel. Oh, there's just random numbers, and I'm like, okay, show me your random numbers. They are somewhat, what they are probability numbers, and you watch for actions around them, and that's really what you want to use those numbers if you're short-term trading. But even if you're not short-term trading, if you are looking at an entry point and you're trying to find maybe a premium entry point, it goes to why I developed them in the first place, is being able to actually look at the grid, say, hey, I want to buy this market. Where am I going to buy it at? So I'd rather, based on what's going on, if I could buy S1, that's certainly a better value, especially if the market's flat or up on the session. If I can get an opportunity, I want to be long this thing, I want to buy S1. And
I just need to have my worth of stocks over in my portfolio added to the grid.
no, and that's everybody's got a slightly different agenda of what they're trying to achieve, but that's the point of those numbers, is trying to find that premium location based upon whatever you're trying to do. So people sometimes misconstrue, wow, future just opened down 425 here. Yeah, so yeah.
Well, thank you for the discussion.
Yeah, no problem. My pleasure. Yeah, so okay. Yeah, we'll go for about another 15, a few more questions, and we'll call it quits. Yeah, Christopher over on YouTube, thanks for that. I said your random numbers are highly probable and have been very accurate for me. Me too, for about 20 years, and for a lot of other folks. Yeah, no, it's funny, because you folks know the deal. It's the internet. no one, there's so much snake oil and crap out there that I get it. I get when people are skeptical. I get it. I really do. I'm skeptical. I'm probably one of the biggest skeptics of anything and everything. So I get it. So I actually did, somebody said it's still short. I actually did hold some XPXS that I put on. I think I put them on at 16. A few ticks off the low. I got really lucky because it was printing up there at that S3 number. So I left those, but all the other stuff came off. But yeah, so a good market grid question for sure. What else we got, folks?
Can you go over the Portfolio Expert platform release date again? Is that real soon, or are we shooting for this week?
Yeah. It's subject to me finishing a video so people know what they're getting. And I've got I was telling Mason, I got everything laid out. I just have maybe tonight, it's probably a 5, 7, maybe 10 minute. Yeah, probably 5 to 7 minute video is what I'm shooting for. Just an introduction like what we did on WaveTech. And then that opens up another can of worms, which is doing what we're doing now for Expert.
Right.
So,
I do understand.
Yeah. So, yeah.
But the video definitely is important because that has been a question that's cropped up over the last few weeks is what are the differences, what are the other features you get, and I did tell them I believe we're going to publish something or do a video that will explain.
Yeah, and the primary thing is being able to trade, as you know, being able to trade the symbol in a multivariant environment. Otherwise, trade the same. You could just build one portfolio with one symbol and trade it daily, weekly, monthly, and let it just trade one symbol, and it can do amazing.
Right. I have experimented with that. Yeah, that's crazy when you're doing it that way.
Yeah. So it's not like you don't even have to build a portfolio. You could build a portfolio just to trade Microsoft or whatever. And so it does give you the ability to, it's going to trigger all kinds of trades, and you might end up with you can do daily, weekly, monthly. So it's pretty insane what you can do with the thing. It's a great sandbox to play in. And then when you figure out some stuff, you can really build some amazing.
Earlier, Bob, you mentioned the expert about scaling in daily and scaling out.
Yeah.
On a particular stock.
Yeah.
Ticker.
Yeah.
So, like going in 25% on a day or 50.
It'll.
WaveTech is all in or all out.
Exactly. And the issue with WaveTech is it won't allow you to put the same ticker in multiple times, and Expert does. And there's a big, it's a big, I don't want to bring it up because we'll have to be here for like 3 more hours. And you guys, most of you guys probably want to go home for dinner and, all that stuff. So, and I've been looking at the weather around the country. Most of you aren't running your air conditioners like Jay and I are.
Yeah, I know. We're still like at 97.
I know.
It's cooling down, but it's still warm.
Well, it's a little cooler up here, but it's still nice. Anyway, yeah, so I rubbed that one in, especially Minnesota folks. They got like 3 inches of snow last night.
But there is a definite advantage of not being all in and all out, or scaling in and scaling out.
Yeah,
in the daily.
Yeah, there is. And yeah, so what we've done in the past when we didn't have the other platform on that is what you can do is find stocks that are similar to what you're trading, maybe the same, they profile similar, they kind of move together. So then you can do one weekly, one daily. It's much better on the other platform. There's no doubt. And one of the biggest issues we've had is just trying to get pricing mechanism and stuff like that. I don't know whoever asked the question hours ago. I saw it and I meant to answer it, but you know what what valuation on a portfolio should you have to run this platform, to pay for it, and all that stuff. And it varies depending on the type of returns you're getting. But for the most part, if you're running 401ks, trying to manage your money in a I guess structured environment like what we're giving you, then it just depends on, if you look at the cost of the software, you've got to have at least a certain amount of money to keep within what's standard in the industry is around 1%. Some folks are 0.85, but so it runs anywhere from 50 to 50 to $250,000, $300,000 account. And our whole methodology, to be straight up on this portfolio expert, is basically, if you've got $300,000 plus in retirement funds or other funds, then it's a platform you're going to want to use, because we're going to be able to do a lot of things. And you could use it with less money if you're getting the returns. So it's just a matter of when you start looking at expenditures. We kind of, since we've dealt with the advisory community for all of these years that we have, we kind of look at this 1% factor. But that's if you're generating, like some of the portfolios that we've seen, that like this year are up 35, 75%, a couple percent on that money doesn't really matter. But it can become material over time if you're not getting the right kind of returns. So I think we've got everything together there. But let's see here. Anybody else have something?
Bob, there was a question on Zoom regarding the 3-2 versus 1-2 trading systems. Maybe you want to address that real quick?
Yeah, boy, is that a common question, huh? You want to address it?
I really did on the chat, but you have the expert voice on that.
Yeah,
I have to say thank you, Stuart. Yeah, him and I were chatting a little bit, but he's helping kind of back me up on answering questions. I didn't know. I did see that. I didn't know he was on YouTube as well. So he's trying to help back me up on both chat forums.
Yeah. So
you're doing good though.
Yeah. So the primary difference between the two models is really a volatility issue, and I'm just trying to think of a good symbol. Do you have a good symbol, Stuart? That
hey, throw Netflix in there. They missed tonight.
Yeah, they did. It was. I was looking at that. It was down about 8% initial reaction. It looks like the futures folks didn't like that.
It's one of the big players now, right?
Yeah, so Netflix is long from forever ago. So that's interesting. Netflix bought on 12/19. I'll get this right. 12/23 of last year. So it was a Christmas present. Day before Christmas Eve, it went long at 337. It's still long on this thing, and it's up 57. If we go to a daily model here, yeah, you know what? Let me go back. Let's just do 1, 2, 3, 2 here. So we got a daily model. You see, it's got an excellent rating. We'll just see what the difference is. We'll flop over to a 3-2 model, and 3-2 could be it's not the best model. It has a little bit of a lag in getting in. It's only up 21%. It came in a little later in the pattern. Is there elements that it has to deal with? But 1-2 tends to be. So if I was on expert, I could show you more of this. But that's the other thing on expert. You can see all of the trading. This one you're blocked to 180 bars, and the charts are like good. You can actually have candlesticks and all kinds of stuff on that. But from the standpoint of looking at what's happening here, they both have excellent rating. This one has a 763 ER. We go back to 1-2. See what it is. It's a 324, but here's the difference. We're going to go over to the model results, and this is where we'll see the difference. So the better ER is 3.2. The better total net profit is 1.2. So 1.2 does about 30+% more transactions. So we'll just look at this. Total trades on this. This is weekly model. 1.2 is 20. The ER ratio is 324, and the total net profits was 1,193%. So pretty good. But if we go over to 3.2, we're going to have the higher ER, but they're pretty darn close actually. We got the higher ER, 11,103. I forget the other number. I think it was 11,190. So there was a little bit more profit in here. So we created $100 to $200 here, I guess. Actually, $10 to 200, and you can see there were 14 trades. So that's pretty accurate. 1-2 had 20 trades, 6 more trades. So that's right. Yeah, that's pretty good number. Right at around 30% more trades. It actually had a little more profit in this case, but both ER ratings are excellent. The ER stands for effectiveness ratio. So it would come down on a stock like this. It would come down to, if we go back, let me just go back to the symbol. Let's go back to the page where we can see the trades. It sometimes comes down to, in a situation like this, that could be trade locations. Like, I like where this one buys and sells better than where this one buys and sells. And in this case, we can only see back that 180 bars. If we were in the expert platform, we could actually see, we could see it all the way back to the beginning, the first trade. And that's the other thing on any of them, whether it's WaveTech or on Expert. If there's a brand new offering, Jay, do we know a symbol that has been put in recently that's a new symbol? Can you think of?
Not off the top of my head, I can look, but
there was
No.
Smith & Wesson spun off recently, SWBI.
I don't know if is it in there though?
Could be.
Yeah, there it is. Yeah, okay. Yeah, so this is a weekly, so that's fairly new, but this actually illustrates the point exactly, is once, and we'll go to look at a daily symbol, daily model as well, but what happens is, my original partner, David, figured out, I actually challenged him and he came up with the idea. I told him I'd always give him credit for it. I still am. It was 24 years ago. So David, if you're watching out there secretly, yes, I still give you credit for this. But he figured out, we were trying to figure out how to trade a symbol. We need about 220 bars to calculate our indicators, set up the patterns, do a bunch of stuff in the models themselves. And if you look at a lot of things, like if you're a TradeStation user, TradeStation, you can't get a signal or you can't build an indicator until you have enough data to seed the information. So what we figured out is that we seed the data. So we take the very first open, and basically if you're looking at a chart, we draw a flat line going back 200 bars ago, weekly, monthly, whatever it is. We just generate that flat line. So as soon as that symbol starts trading the next session, it's going up or down. We can actually calculate and start already evaluating patterns and other things that we're doing. So you can see the very first week out of the chute, this thing went long, this symbol, and it was able to generate a buy signal. It has no ER ratio because it hasn't even had a buy and sell trade yet. So it's brand new. So if we go over here to a daily, you'll see the same thing. Here was this would be the first bar. On the second bar, we actually bought this thing. We sold out of it, and then we bought back in. So we've been out of this thing. So we actually have an ER because there were transactions. So the way that the ERs work is that they are calculated off actual trades, and you want to have, in reality, you want to have at least 4 to 10 transactions to evaluate. It's going to give you a much better view and give you better statistics after it's made that many trades to actually evaluate. Right now there's one trade. Okay, so it doesn't know anything. We can go over here and click on model results overview, and you're going to see that this is just kind of washed out. I think I clicked on it. Try it again. Yeah, we're getting close to that time where the servers are about to crank up, so it might be slow to that. But anyway, what we can see is what trades are done. We're actually generating resistance, support numbers, all that. We're also the trend phase is kicked in and telling you what's going on with trends and all that. But all this stuff happens very quickly because we can actually generate those symbols. But the 1, 2, 3, 2 thing is one's more aggressive than the other. There'll be more transactions in 1, 2, 3, 2 has an extra filter. You folks that watch the channel, you can see we have ppm 1, 2, and 3. Well, when you go to 3, 2, we don't show it here, but there's actually an additional ppm. There's actually ppm 4 that exists. It exists in the logic. It doesn't exist on the screen. I don't even believe we put that on the I don't think we even put it on the expert as well. But yeah, but that's basically, and I never show it even on when I do my YouTube channel. I actually have 1, 2, 3, and now I have ppm 200, so I'm tracking the 200 period moving average with that as well. That I don't even put the 4 on here, and it only relates to that one model. So, well, we've got 1 hour and 44 minutes, I guess, since I started the screen. So let's do one final question, see what you folks have, and go from there.
I have one more question, just for clarification.
Sure.
On the screens where it says ER ratio, is that referring to an expense ratio, or is that the ER rating?
That's the ER rating.
Okay, thanks for clarification.
Yes, yeah. So just if we go, let's go back over there and just bring up that thing again. So what Steve's talking about here is when you bring up this, we'll bring it up in Google Sheets again. Yeah, so over here it says ER ratio. That is actually the ER in the system. So that's and that goes back to when you were going through the process you were talking about earlier, Steve, is that basically all the work's done. So if you're trying to find best ERs, you can see what the ERs are, whether they're good or bad. Like here's one that's 20, but maybe it's 20 because there's not that many trades. So you still have to, once you locate those, whether you're going through the screening methodology that you talked about, how you're eliminating stocks, then you can go through that as well. So just a quick comment to Stuart. It sounds like Jason might be doing your homework for you.
Jason's doing my homework?
Yeah, he's finding all the duplicate things on the screens and all that. So
Good. You can
Might-
finally send it to me then.
yeah, well, probably build it in a Premiere or something. Oh, you probably
Actually,
don't
I have
want.
my daughter working on a filter for the entire screening system.
Good deal.
Yeah, now that I know Stuart's using that, I can share the notes. I can share the portfolios with him. and stuff.
I don't know.
No.
Bob doesn't want me having all the keys.
Ah, okay.
So yeah. So any other questions? I know I've seen. I'm just looking through list of folks hanging out. Yeah. I was just watching a clip from. Oh, I know. I wasn't watching a clip. It was on the other night. Ferris Bueller. It's like, anyone? Anyone?
Anyone? Bueller? Anyone?
So okay.
As soon as we're on the CBOE, all I ever think of is Kendall.
That's pretty.
One of those mad bastards down there waiting.
There were plenty of them once upon a time.
Mm-hmm.
I might have known a couple of them really personally. Anyway, yeah, folks, thanks for watching. I hope I answered all the questions and stuff today. I feel like this was pretty material folks got to ask. I really appreciate Steve. I just want to call out to you that sharing that process with us is really good. That was excellent. All right, folks, it's that time of day, and if I'm going to have the video out, I only have about an hour rest, and then I have to start working again. And I have a meeting, and hopefully we can figure out what's going on with this market grid that keeps getting skewed somehow. All right, folks. See you tomorrow. Live stream, 1:30 Eastern time.
Good night, guys.
Night.
Good night, guys. You guys take care.
Yeah, you're welcome. Always fun to hang out with you guys. Guys and gals.
Take care.